Hello, and welcome to another episode of Escaping Dystopia. I'm your host. They call me Wah. Today we're going to be talking about a somewhat uncomfortable subject, a little bit of politics. Let me be clear about something real quick. I actually have a great deal of respect for Senator Warren and the person she's going to be talking to here in a moment, our Secretary Gensler. Gensler teaches a course on cryptocurrency at MIT that's been very popular in the cryptocurrency world. He taught it back in 2018. MIT has been a hotbed of cryptocurrency development for a decade now, since it has existed. Senator Warren actually supported her campaign in this last election cycle to be the Democratic nominee. I thought she had some really good ideas, and I absolutely love her focus on income inequity. I think she's absolutely horribly and completely wrong about cryptocurrency. So I'm going to go through this basically about 4-minute or so clip of her talking today to Secretary Gensler and have some rather pointed responses. So if you allow me some leeway on that, hopefully this will all work right. You'll be able to hear what she has to say and then some of the responses that I have as I interject somewhat rudely. Apologies, but this is a frustrating thing, so I kind of wanted to go through this for a little bit. So without any further ado, I just wanted to tell you where I'm coming from so you know where I'm trying to get to.
Thank you, Mr. Chairman. We hear a lot about how crypto is all about financial inclusion, a way for people who don't have a lot of money to be able to manage it or invest it. Now, the banks...
Hold on just a second. Now, I want to talk about something real quick here, because one thing that she kind of glosses over here is that cryptocurrency is a permissionless system. You don't have to ask anyone's permission to join and be a part of it. Our traditional banking system, you don't have to go that far back into our history. And the senator knows, in fact, that our banking system excluded women until recently, and that the banking system and people of color don't exactly have a very cohesive relationship. Now, this crypto system, this monetary system that crypto represents, does not have any of those kind of limitations. It's permissionless. That means nobody gets to decide who gets to do it or not. So she glosses over it quickly, but this is the system that she actually wants, is the ones that she's going after. This theme will come up again.
Now, the banks have done a pretty lousy job on financial inclusion, so I want to test out with you whether or not crypto is an improvement.
Now let's pause this for a second. The scenario that she's about to set up here is somewhat absurd, and I'm going to show you how absurd it is here in a second. But be that as it may, let's walk through this.
Last Tuesday, the crypto market tanked once again. The prices of Bitcoin and Ether each fell by about 10%.
Okay, so for those of you unaware, 10% of a crypto market is not a tank. It's a pretty common swing. It goes up and down by these ranges on a daily basis. 20, 30% daily swings are not in the slightest bit unheard of. It's an extremely volatile market, and if that scares you, and if putting the scenario that she's talking about here, putting in $100, seeing it drop to 80, makes you panic and want to pull it out, you should not be anywhere near this market. You should not be investing this money that you need. There's two things people talk about all the time for crypto investing, and Senator Warren really does a disservice to everyone by not noting them here. You shouldn't do what's called FOMO, which is the fear of missing out, which is just to buy something because you see other people buying it. You should do your research and make sure you know what and where you're putting your money. The one thing that the senator's telling people to do here in a second is something that you should never do, which is invest money that you are going to need soon. You should only be investing money, and cryptocurrency is very much an investment with one caveat, and that's stable coins. We'll talk about that at another point. But you should only be investing money that you are not going to need on a near-term basis. So if you shouldn't be needing that money for at least 6 months or a year longer. You should be thinking in 5 and 10-year investment terms if you're going to be involved in crypto. And this is one of the things that she really does a horrible disservice to everybody who watching this by giving this example she's about to discuss.
While a bunch of other tokens failed by as much as a third. So in a matter of hours,
it's essentially Monday. It's or Tuesday or Wednesday or Sunday. It's crypto markets are 24/7 global markets. Again, permissionless. There's nobody to tell you to stop.
$400 billion in market value disappeared.
Well, hold on just a second, Senator, because again, you're only looking at one side of this very intentionally. That 400 billions of markets of value that disappeared did not exist 2 months ago. The other the other $400 billion of market value that has now been created this year didn't exist 9 months ago. And so for you to say that it poofs, you can't say that it goes away without acknowledging that it came into being first. And so this is why I find your argument here somewhat disingenuous. This market is volatile. It is. This is what we deal with.
Poof, just gone. And meanwhile, several of the biggest crypto exchanges had outages, which kept customers from making withdrawals or trades.
Now, hold on just 1 second. Now, so this happens in all markets with great volatility. It's gone down with a few centralized exchanges a few times. But she's making a really fine point while ignoring the larger thing here. If an exchange goes down, the person can't do what she's about to try and do. And they should never do this, and this is such bad advice what she's about to say. That's what blew me away about this.
Customers from making withdrawals or trades. So how did that affect people who don't have a lot of money to lose?
They shouldn't be investing. And that's the thing. If you don't have a lot of money to lose, you shouldn't be worried about a 10% daily shift in this. In this whole, they're worried it's going to tank. If you are like a newbie, as the word goes, in the crypto markets, you will think it's going to tank, and you are wrong. And you gotta just chill out and start to realize what you're dealing with here. And it's just so unfortunate that this is the way she tried to present this.
Chair Gensler, let's say that last Monday I took out the last sliver of my savings. I went on the crypto exchange Coinbase. I bought
Don't do that!
worth of Ether. Then I woke.
Don't buy Ether right now either. She'll get to why in a second, but this is again why you need to do your research and talk to people who are experts before you start to invest money.
Up early on Tuesday morning, I saw that the market looked like it was beginning to tank, and I thought I better sell right now.
Looks like that every day.
When I tried to sell, Coinbase, the exchange, was down. So, Chair Gensler.
And this goes into they were unavailable. I didn't even notice this, and I'm on this stuff every day. And part of it is why you're talking about computer networks. And as you all know, they can get congested. But the thing about crypto is it has a very good way to resolve all of this because it's been designed knowing that they live on the internet. Anyway.
Was there anything I could do to get my money out?
So he's going to be very disingenuous with this response.
Not at a federal agency because they haven't yet registered with us, even though they have dozens of tokens that may be securities.
Yeah.
Okay, so there's a bunch of stuff that he just said. So she's asking, can I get my money out even though it's held on an exchange? And no, you can't, because not your keys, not your crypto. If an exchange is down, anything that is held in the exchange wallets will be inaccessible to you. If an exchange disappears, any tokens that were held on that exchange disappear. This is part of the risk of this market. And again, I want to be very clear to anybody watching, the risks involved in crypto are very large. They are very large, and that's why it's so important. That's why Coinbase is not going to disappear. They're going to come back. There's at a certain point, this would be like, Walmart or Kmart disappearing tomorrow. Now, I've actually seen this happen in corporate America where large companies had nothing inside of them. I, cut my teeth in the corporate world working on Enron's bankruptcy, just to do my quick little corporate dust off. So I've been around. I've seen this happen. It happens in the real world as well, or what we call the real world. So his response here is that, well, there's no federally assured way to do this. And it's like, well, no, because you don't have control over these exchanges. Now, we're going to go to another. In Gensler's earlier response, he talked about Coinbase and how a number of their tokens could or could not be securities. Coinbase recently asked him to tell them which were which and why. And because this has been kind of a big question across this space as the regulatory issues become larger, is which ones are securities, which are currencies, which count as this, which count as that. And they can't get clarification from this guy. And so he's got in his mind that, dozens of these count as securities. Well, which ones do? Because you need to start telling us very soon.
Okay, so that sounds pretty risky to me.
It is absolutely risky, folks. Please make no mistake. This is a point of full agreement.
But let's say that instead of buying Ether on Coinbase last Monday, I decided instead to put that $100 toward buying a cool new token. Let's call it new coin.
Okay, don't fall into this. This is the FOMO thing. And if you go onto Twitter and you say, oh, what's the hottest, latest cryptocurrency? You're going to... Don't do what she's about to say. Don't do it. This is really bad. This is like the dumbest thing, the thing you learn not to do immediately.
That was being hyped on Twitter. Now, NewCoin is available only on a quote-unquote decentralized crypto exchange.
All right, so I'm doing a whole series about DeFi, which is decentralized finance. Decentralized exchanges have this really incredible ability. Because they're decentralized, nobody controls what you can and can't do with them. Ethereum is a virtual machine, and the contracts on it are programmed, so anyone can deploy a contract to Ethereum. Anyone can create a smart contract, create a token on the Ethereum network, and then trade it on a decentralized exchange. She is talking about this and glossing over how this example that she's now talking about actually counteracts what she was saying earlier. This is a permissionless system. Someone has created NewCoin. Nobody said whether they could or could not. They just did it. And that's what I'm talking about. This is a permissionless system.
So to buy it, I had to pay a fee, about $20, to the crypto miners who process the transactions. That's $20 to buy $100 worth of tokens.
Okay, so she's talking about here is gas fees. $20 is what you're going to pay on Ethereum right now for a simple swap. Now, if you go to any Ethereum discussion board on the internet right now and you're like, hey, what's going on with the gas fees? You will get flamed to all get out because this has been the focus of their lives for the last 3 months, 4 months. It's the gas fees on Ethereum. I wrote about this back in April, that Ethereum at $4,000 is an unusable network because the gas fees are too high.
But I figured that was okay because Twitter told me that NewCoin was going to make me a lot of money.
Don't listen to Twitter.
But then, of course, I woke up on Tuesday morning and the market was tanking. So let's ask about this one. Chair Gensler, on Tuesday, when I wanted to sell NewCoin and get back to dollars fast, that exchange had not shut down. But remember...
Yeah, that's because you can't really shut down decentralized exchanges. But what she says here next is just rough.
Or I had to pay $20 on Monday to get into decentralized finance. So how much would I have had to pay to get out of DeFi on Tuesday to sell my coins? Would I have had to pay a second $20 fee, or might I have had to pay even more?
I don't know, because it'd be all in the user agreement. And by the way,
So again, this is disingenuous. I'm going to let him go back and start here again. This is very disingenuous. The user agreement is essentially what you're agreeing to when you do a swap in a decentralized finance application. I'm going to show you one here in a couple seconds. And I'm going to tell you exactly how much it costs.
I don't know, because it'd be all in the user agreement. And by the way, you put quotes around DeFi. I think that's helpful because they're really decentralized in name only. There's a user agreement. There's something you're doing with this platform. There's a governance token. There's usually some fees, but I don't know what the particular fees would be.
Well, actually, we do know some of the fees from last Tuesday. The fee to swap between two crypto tokens on the Ethereum network was more than $500. Obviously, way more than the $100 I was trying to trade.
Yeah, and this is why you should not be using Ethereum right now to swap tokens. I can't emphasize this enough. This is what they are right now. This is why Ethereum's ridiculous. I'm going to show you real quick another swap. So let me bring this over. We'll go full screen on this side. Let me bring over this. This is QuickSwap. QuickSwap is actually run on, it's kind of what's called a layer 2 solution. And what I'm doing here is you pick the tokens that you want to swap. Matic is what it runs on. I have 1.139 Matic. Matic currently is worth like $1.39. So this is $1.30 worth of gas. I'm going to swap this random DNXC token. This is a NFT gaming token. Here, you can see me. Hey. This is, it's one of those new kind of Pokemon games with dinosaurs, whatever. So this is how much. I'm going to show you how much it cost me to swap. By the way, so you log in, and I'll cover web wallets in another time, but you basically log in, you click, you connect. You can also connect through your phone. You have QR codes that you connect your wallet to the phone to the website. It's really cool shit. This is, Ethereum's a layer 2 network. It's different. QuickSwap uses it. I'm going to show you, I'm trading, let me go, here I'll go. I just have a few little things here to play around with. We'll stick with the DNXC and we'll go to USD. So this is Tether and then USDC. These are basically your stable coins. So going from 5 of these, they're worth $250 now. So let's see. And so here it's showing, and he's like saying the user agreement and all this stuff here. Look, this is your user agreement right here. It's saying your minimum received will be 2.556 USDC. The price impact, this is the swap, right? Liquidity provider fee. I'm paying this much to the people who have put their tokens out there to allow me to swap. Here's what it's going to do. It's going to trade from DNXC. It's going to go through Quick, and it's going to pull out with USDC. So I say swap. It says, oh, you want to do that? Are you sure? I say, yep. Ooh, price updated. I'm going to accept this new price because it's going out and saying, oh, well, the price has changed in the last few seconds. I'm not going to rip you off here. So now it says, oh, okay, hey, you need to do that. Here, go this. This is how much I'm paying to swap this. 0.000471 Matic. Again, Matic costs $1.36 per Matic. I'm paying 4/10,000ths of $1.36. It's the portions of a penny. And she's saying, oh, it costs $500. This is a network only for... No, Ethereum right now has $500 swap fees. Matic has 0.00 cent swap fees. Now you're still paying like your 0.2% for the pool. Again, none of this stuff is free, right? On say Coinbase, their swap fee generally is 0.5%, which is pretty high. Most of the decentralized finance pools are going to have a 0.2, 0.3, 0.25% swap fee. Again, it will show you here, and that's what it was calculating there. So now this is pending. This will go out, and we'll see how long this takes. I'm going to go back and let Elizabeth continue talking while I let this complete. So again, I've submitted this, out to the blockchain while it's doing that. Again, I paid 1/4 of a penny, not $500. And that's what blows me away here, because she's talking about this. Oh, it's done. It just confirmed. So now it's completed that transaction, and then I'll see if I look in my account, I now have that USDC. And boom, 3.354 USDC, right? So I just traded that. This is, I traded for 250, but I paid like nothing. And so this is why I'm saying, like, you're trying to kill this stuff and regulate it, overregulate, but this is this thing where people can trade and invest these at $5 and $10 at a time, and these transactions work and they complete. So you're killing me, lady. You're killing me. All right.
In the first place. So the question I have is, in the face of these high, unpredictable fees,
don't use a And I don't want to belabor this point, but there's 5 other blockchain networks that I could show you that all have fraction of a penny fees right now. What she's saying is true, but kind of irrelevant, and it's
small investors could easily get jammed and wiped out entirely.
Don't use Ethereum. Do your research.
Chair Gensler, advocates say crypto markets are all about financial inclusion, but the people who are most economically vulnerable are the ones who are most likely to have to withdraw their money the fastest when the market drops.
And again, that's what she just said is actually not true. It might be true psychologically, but again, you should only be investing money that you can keep in the market, and you need to invest it with an idea, if you do it in crypto, that it's going to be going up and down by 10, 20% a lot. And it's best, this is where the whole HODL, HODL came from. It stands for hold on for dear life, because it's going to go all over the place. And if you are just, gotta sell, oh, it's down, I can't, this is not the place for you right now. It just isn't. And that's part of it.
Does this sound like the path to financial inclusion to you?
It's a highly speculative asset class. It doesn't sound like the path that you mentioned.
Yeah.
A highly speculative asset class sounds exactly like what people who are stuck economically are going to look to for economic freedom. And this is where you guys are killing it, because this is a way, using that Ethereum example blows away the reality of it. And that this is what you want to see, Senator Warren, and you are just too far disconnected. I don't know if you don't have the right interns. I don't know if you're just getting biased information from somewhere else, but this was a very disappointing hearing. And I think I've explained why.
Yeah. There are a whole list of problems with crypto. Unreliable tech.
GFY. I'm seriously, I don't know what you think or assume is going to just work on the internet, but as someone who has been working in it and using it, my whole life as a native technology, give me a break. Come on, lady.
Scams,
that I'll give you. There are scams out there, and you need to be careful, and that's who you need to be going after. And that's the thing. You don't need to watch. So Gensler is trying to push for the notion that if that web wallet that I was showing you earlier, if at some point one of those random, say that DNXC token jumps up to like $50 a piece somehow randomly, and now my what was my $15 becomes $600, he wants to know how much is in that web wallet, and it wants to monitor those account values. And that is like the level that's like, wait a second, you need none of that.
Devastating climate impact.
Wait, what? Wait, hold on. Hold up.
Scams, devastating climate impact. But
hold on. One moment. Look, I'm not going to talk about this much. I have children, right? I've been following the science for climate science for my whole adult life. believe this planet is getting warmer. I can feel it. I can see it. My children are going to have to live in it. This argument against crypto on an environmental impact basis is really, really silly. I understand that there are certain cryptocurrencies that do consume a lot of power. And I'll have to, it's the thing is, I don't want to go into this too far, but essentially the way Bitcoin, which is only one cryptocurrency, works, you can throw all of the energy in the world at it, and it won't make Bitcoin any faster. You could put 5 computers doing it, and it won't make Bitcoin any faster. The reason why the Chinese were throwing so much energy into it was because they had free electricity. They built these dams in the middle of nowhere, and they couldn't do anything with the electricity, so they were using it to make Bitcoin. When you add new computers, new processing power to the network, the Bitcoin algorithm adjusts itself and makes it harder to make Bitcoin. So you keep pushing harder and it gets harder and you push harder. And that's where you got to because you had all that free energy coming from Chinese dams in the middle of nowhere. And I know this is such a weird international politics. Crypto's a crazy global thing, but understanding the dynamics of it, that's why it crashed earlier this year, because China banned it because China was losing control over their money supply system, which is what Gary's starting to feel too.
High, unpredictable fees can...
Again, Ethereum, don't, until they get ETH2 out there, it's just...
make crypto trading really dangerous for people who aren't rich. Regulators need to step up to address crypto's regulatory gaps and ensure that we're actually building the inclusive financial system that we need. And Chair Gensler, I expect you and the SEC to take a leading role in getting this done.
Hey, there's an open request for Gensler for him to define what he thinks and why he thinks it about all of this stuff. And he needs to do that before we write laws about this. I wish you guys would look at Singapore and Portugal. And I'll tell you, I'm going to go into this a little bit more. Let's let Gary speak real quick.
Thank you.
No, thanks, we're done. All right. I'll say this real quick. We're way long on this, so I'll have to edit this down. I'm rambling now. Thanks for dropping by. This whole thing did what I wanted it to. We'll see.